Happy Monday, everybody. It is T-Bone here with Stock Talk. I haven't done one of these in a while, so I'm excited to talk to you guys about stocks again. On today's episode, I want to discuss, is the market going to crash? The answer is yes. Do we know when? No, we don't. So my advice is to be prepared for both options. The market's going to continue to go up, or the market's going to come down. Is your portfolio ready for both? So I'm always asking myself that question, because obviously the stock market's going to crash at one point. You can go back through history, right to the Great Depression, and watch it drop over and over and over again. Usually it's around within a 10-year period. We are in an extended, well, I guess you could count last year as a crash, obviously, the fastest stock market crash in history. But I think there's another one coming, and there always is one coming, so you always have to be prepared. So what are you doing to your portfolio to protect yourself? And also be prepared for it to go up. You don't want to be all in cash, and it goes up for 2 years straight, and you're left there with no gains whatsoever. And if inflation is happening like it's happening right now, your money's going to be worth a lot less a year or two from now. So you sort of want to be 1 foot in, 1 foot out at all times. Just my advice. I am not a financial advisor. This is just for entertainment purposes, of course. So the markets, they took a dump this morning. Everything was down, and they're recovering at this point. Let's look at the S&P 500. I'm going to tell you guys what I bought today as well. I did a lot of heavy buying when things were down. So when there's blood in the streets, that's when I buy. I like to buy a stock that's beaten up, that's been kicked around. I find that's the only way I make money, is to buy low and sell high. I don't buy when things are up. And then I will sell when it's up. Buy low, sell high. That's the way to make money. So the thing is it's tough to buy when a stock there's trouble with it. For instance, Alibaba, something I bought today. I'm just looking at the overall market. I'll show you the thing that sort of scares me. Let's look at the 5-year here. So I'm sure you guys have seen this before, but if you look at 2018, there's the high there, then it sold off. And then at the end of the year, I don't know if you guys remember this, if you were in the market, but around August, there was a huge sell-off, which went right to like Christmas Day. And it was a good one. And that's when the Fed raised the rates, at which point they changed their minds because they were tanking the market, and the market recovered until the pandemic, and it crashed again. But you see a higher high and then a lower low. Higher high, lower low. Higher high, lower low. Higher high. This next one could be a doozy. It could fall fast, or it may not. It could go on for another 2 years. If there wasn't a pandemic crash, the line would have went across. Let's draw a line here. Go to draw. Let's draw a line from, let's say, I don't know, from this peak through these peaks. So you sort of have 3 touching points of data. So if there wasn't a crash last year and everything went dandy, well, then we're starting to get a little frothy here. We touched here, 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 here. Now, the pandemic is, it's a once-in-a-lifetime thing, hopefully. But it looks like we're getting a little frothy here. But again, this isn't like abnormal. If there hadn't been a crash, just for things to go up. But again, it's getting pretty frothy. I expect a crash, but also I still got to stick to my guns. I still got to stick to the companies that I love. Like Alibaba is one that has gotten really beaten up. So let's look at it. I sold some of my Baba at over $300 US. I sold on the way up. I sold some at $250, then some at $3. I bought it, I think, at $140. If you look at some of my old videos, I was buying it around $140 back in the day. So let's look at the 5. So at one point it was over 300. I sold a chunk here, and as it fell around 280, I sold some more, and now we're down to 182. If you look over here to the price targets, is that going to give it to me? Well, first of all, financials, right? You've got more revenue every year. That's the green line. And then you've got the earnings. So it's growing in earnings, so they're making more and more money, and that's the chart you want to see. That's the company I want to invest in. Doesn't matter if it's China or the United States or Canada or Europe. We are getting mostly strong buys and buys. So 1.8. We have a price target. This is totally wrong. It's not 1,788. I believe it's around 280. 250 to 280 is where all the price targets are, and we're at 180. So we're low. There's a potential, $100 US upside per share. So I'm buying right now. Actually, I bought it more expensive this morning, so it must be falling all day. I bought it around 184, I believe, when the market opened. So yes, I am buying that. I am also buying, and I'm prepared to sit on Alibaba. I know there's a lot of issues with it, right? Because the Americans could delist it, which would be horrible. Or, the Chinese government is playing around with their tech. They're slapping around their tech companies like Tencent and Alibaba. They're doing what the American government would like to do with theirs, like Facebook and Google. There's talks of breaking them up and taking away some of their power. They become too powerful. Well, in China, they don't have to go through the courts. They just do it. So that's what's going on there. Is they're sort of like, they went after Jack Ma. They're cracking down. So that's why the price is getting hammered. And I like to buy stuff when it's beaten up because I don't want to pay full price for stuff. I want to buy low, sell high. So that's why I'm buying that. Let's go to something else I bought today. I bought some Beyond Meat. And let's look at the chart. It was I bought it at 117.5. So Beyond Meat, I believe, has a huge potential. They just signed a deal with Pizza Hut for some type of pepperoni thing. My family uses it all the time. The sausages are fantastic. We put it in lots of meals, put it on pizzas. We use the Beyond Beef burgers. We had some last night. They're fantastic. They don't taste quite like beef, but close enough that my family, my girls, think it's beef. So I'm not too big on the killing of animals to feed the population. So I'm all over Beyond Meat. I think it's huge upside. And let's look at the chart here. I bought it at 117. The last time you could buy it at 117, or the last 5 years, would have been probably during the pandemic crash. You could have bought it for $66, which would have been fantastic because you could have sold it at 178. So if you had bought it when it was beat up, you could have sold it high. So let's look at the max chart. 106 and 104 in May, it would have been a good buy. You could have sold it for 145. You would have made a profit. Let's see, what's 118? Seems like could be support here. So anyways, I bought, how much did I buy? I bought $1,000 of Alibaba and $1,000 worth of Beyond Meat this morning. Now, usually these are risky. There's no dividend. So a lot of times when I buy something that's a little risky, although I do believe in both those companies, it's DraftKings, Beyond Meat, and Alibaba are what I'm trying to collect shares on right now, and they're sort of beat up. But when I do that, I also buy something like quality that will give me dividends. So I'm going to show you guys two that I bought today. So one is called Extendicare, and this is a Canadian company. They've been around for like 50 years. They've got like 65 long-term health care facilities. A friend of mine works there, and this is a monthly payer, and it's 6% dividend. And I like, now when you get a monthly dividend payer, it's fantastic. So every month you're going to get cash, and everyone's bills they come out every month, right? Where most companies pay you quarterly, so it's every 3 months. So I like these monthly ones as long as they're a quality company that have been around a long time with a long dividend history of paying. So I bought some of this, so that will add to some cash flow. They actually paid out their dividend today as well. So some money came in today. I bought $500 worth of Extendicare. You can go to their website, research them, but they've been around for a long time, and they're a solid company as far as I'm concerned. So let's go to the other one. Now, I get a lot of pushback, blowback when I talk about this because, obviously everyone is patriotic to their own country. I live in Canada. When I talk to Americans, they all like to invest in American stocks. Talk to Canadians, like to invest in Canadian stocks. But at the same time, and I've talked to friends of mine who are financial advisors who will say, just stay in North America. But for me, it seems foolish. I don't want all my money tied up in North America just in case there's a huge crash. Because if USA crashes, Canada will probably crash too because our economies are very, joined at the hip. So I'd like to get some more money out of North America because like 90% of my portfolio, probably more, is in North America, and I'd like to be spread out in case there's a crash. Let's say all my money's in Europe and Europe crashes. There's a huge market crash just in Europe. Well, you didn't diversify. You should have maybe been in North America. So I think you have to have your money all around the globe. So hopefully not all the countries will crash at once. That's why Alibaba, I bought that. So let's go to what I bought next. IHY. So this is the Van Eck Vectors International High Yield Bond. It's IHY, and they pay a 4.5% yield, so that's cash on your money. I put about $500 in there just to start, and so these are bonds. These are corporate bonds, and none of them are in North America, I believe. So I think it's China, Italy, Europe, all over the world. Let's actually go to their website. So let's grab this, copy, paste it up here in the top, and enter. And let's go to their website. Here it is here, the Corporate Bond Fund. But it's international. All right, so what is in it? Where is the breakdown? Rated hedge bonds. This isn't quite what I want. Let me see. I want the IHY. Let's throw, here it is. Let's go here. Please don't ask me if I'm, oh my God. All right, so it's hard to find out the information. They do have a web page, but they're asking where I'm from, and you enter that, you don't get anywhere. So let's go back and see if we can get a breakdown. There's nothing in here. Anyways, the top two, maybe let's go to holdings. Here we go. Good. Yay. Top 10 holdings. So we got a Bank of Communications, JR. Not sure whether that is. We have a China Holdings Company, SoftBank, which owns a lot of tech. Vodafone, where's that? France, Italy? It's communications, I believe. We've got, looks like a oil company in Mexico. Something in France. So again, these are corporate bonds, and you'll get paid 4.5% cash on them. I bought 500 just to get some skin in the game, because once I put money into shares, then I start to research the heck out of them. Now, this is the bond ratings, so obviously you want AAA is the best. But so it's saying 61% are in triple B bonds, and 24% are in B, and below B is 4%, and others 9.6. So now that I have some money in here, this financial services, they've got a lot in that. Anyway, see, now I have money in here, so I care. Otherwise, I don't do the research. That could be backwards, but I did research them before I put any money into them. And I want to get my money out of North America and diversified. Again, I'm like 95% in North America right now. So the plan is to get my money elsewhere so I can be diversified. I almost see every country as being a stock. You wouldn't want to put all your money into Tesla and then have Tesla crash and you'd be devastated. But if half of it were in the banks and half were in Tesla, then you'd only be down 50% on your portfolio. So the more countries you can have your money in, to me, that makes sense. I don't know. What do you guys think? I've had conversations with friends of mine who say that, North America has the best, the SEC and the financials are more solid and other countries lie. How do you guys see it? Do you guys see it the way I see it, where it's almost like a stock and you're diversifying? Or do you say, other countries aren't looking at their financials and they can lie, and you could fall for more things, so you're safer being in North America? Anyway, so do you guys know about Extendicare? I don't think most people do. It's a little gem. You can go through their financials. They pay monthly. So you're getting, at 6%, you're getting half a percent on your money every month, and they seem to be quite solid. You're not going to get a lot of growth out of them, but even the price targets on, let's go to that, the price target on, now price targets are just from analysts, and there's not that many on Extendicare because, again, most people don't know it exists. They have, see, their earnings are going up. I like that. So 2017, like hardly anything, and I think that's your net in blue, and the revenue is in green. And 2018, 2019, and then 2020, they're making more money. We've got a strong hold, and the price target is 860 from the analysts. How many analysts are there? I think it's like 2. Although I've seen a few analysts with numbers. So we're at 795 today. So that's a pretty good upside if it gets to where the analyst thinks it'll go based on their fundamentals. They'll look through the books. Anyways, guys, so what do you guys thinking about Extendicare? It would be something you'd be interested in. Even a recession, this is long-term healthcare. Seniors with, health problems, they're going to be staying there. Now, Delta could cause an issue. What do you guys think about it? I think it's a good investment, but I could be wrong. Only time will tell. But it's a good cash payer. That's what I'm looking for. And what about Alibaba? You guys, I know some of my subscribers don't like investing in China, which is fair enough because you are in charge of your own portfolio. Now, what about Beyond Meat? I know people are set in their ways. They've been eating beef since they were a kid, so it's tough to switch over. I don't like salmonella. I don't like the butchering of animals, the hormones in the animals. But again, you can look at what's in Beyond Meat. Like, is there chemicals in there? Like, I've looked through the ingredients a bit and done some research. I'm okay with it. So anyways, guys, what do you think? What was the other one? Oh, IHY. What about the corporate bond payer, cash payer? What do you guys think about that? Anyways, guys, comment below. Tell me what you think. Is the market going to crash? I'm scared of it crashing. I'll do another video about things I'm doing. If you've listened this far, I've invested in the VIX, which is the volatility thing. So as the stock market goes down, volatility goes up. So I'm in a sort of a hedge on the market. I bought another one at the 3 times bear share. So I've been hedging the market a little bit, sort of. So if the market were to fall, I'd have a little bit of cash in those. If you'd like to know more about that too, just comment below, and I can just do a separate video on how I'm preparing for a crash. Having cash on the sidelines is fantastic in a crash. But let's talk. Comment below. Ask me any questions. I've probably got about 60 different stocks I invest in, and I've done quite well. So if you have any questions, tell me what you guys are buying. A friend of mine is working at Extendicare, and he's worked there a long time. Looked into the company, and then I started to buy it. So I buy stuff just from talking to people. So tell me below what you're investing in, and do you think the market's going to crash? Anyways, guys, thanks so much for watching. I will talk to you guys later. Cheers. Bye.